Welcome to the Stock Market Daily News Podcast. Today is May 6th, 2026, and we're recapping all the action from Monday, May 5th. The major indexes opened the week lower, with the S&P 500 falling nearly 1% to 4,956, the Dow down 0.75%, closing at 38,123, and the Nasdaq shedding 1.3% to settle at 16,680. Tensions in the Middle East put inflation and rates back on the front burner as oil surged and investors braced for a potentially more hawkish Federal Reserve. Plus, some headline-grabbing moves from one of the market's most watched contrarians. Stay with us for all the details you need to know as the new market week kicks off. Let's start with the day's most talked-about move. Michael Burry, the investor made famous by The Big Short, confirmed he's dumped all his GameStop shares and is doubling down on bearish bets against high-flying tech stocks. Burry revealed he exited his entire GameStop position, calling out a risky new merger strategy and alarming debt levels. He also opened new outright shorts on Palantir, saying the company is worth low double digits at best after shares soared 800% since early 2024. But Burry's not stopping there. He's loaded up on puts against Nvidia, the iShares semiconductor ETF, and the tech-heavy Nasdaq QQQ, signaling he sees a bubble in AI and chip stocks and expects a sharp reversal by next spring. Shifting to the macro picture, investors are suddenly growing anxious that the Fed could actually hike rates within the next year, a major reversal from earlier hopes for rate cuts. The CME FedWatch now shows a 10% chance of a rate increase before year-end, up from 0 just days ago. This turnaround comes as oil climbed nearly 6% on Monday, with Brent crude topping $100, sparking fresh inflation concerns. The 5-year break-even inflation rate in Treasuries jumped to its highest level in 3 years. Bottom line, markets are pricing in less chance of lower rates and bracing instead for a stickier inflation scenario as the Fed signals a wait-and-see approach. Meanwhile, Bitcoin is having a moment of its own. The world's largest cryptocurrency jumped more than 19% in the last month, breaking above $80,000 for the first time since January, even as inflation expectations climb and rates look set to rise. That's a sharp departure from the old playbook, when higher rates used to knock Bitcoin lower. Analysts say institutional cash is pouring into new Bitcoin ETFs, over $4.4 billion since March, and some are calling Bitcoin the best inflation hedge, even supplanting gold for certain investors. But skeptics warn the test will come if stocks stumble. Will Bitcoin really behave differently, or is it still just a high beta risk asset? In the income investing world, Prospect Capital's 20% yield is still drawing attention. Shares trade at around $3 after a late 2024 dividend cut, yet insiders are buying big. Net investment income is currently covering the new payout with a cushion, and credit quality is improving, non-performing loans are way down, and no big debt maturities are looming soon. But the stock has lost value over time, even with that high coupon. This one may appeal to yield chasers, but total return remains a concern. Finally, for those eyeing payouts from thematic ETFs, Roundhill's Amazon Weekly Pay ETF saw its distributions plunge nearly 80% as volatility cooled. Weekly checks that used to be as high as 73 cents per share are now closer to 15 or 20 cents. This ETF's income comes from option premiums, which shrink as the VIX drops, not from Amazon's actual earnings. Amazon itself looks strong, posting a huge earnings beat and healthy revenue growth, but investors relying on stable cash flow from these alternatives need to brace for wild swings as volatility ebbs and flows. To recap, major indexes started the week in the red as oil prices and inflation risks rattled investors. Michael Burry ditched GameStop and is stacking up tech shorts. Bitcoin is rewriting its inflation playbook, and yield seekers face reality checks in both high-dividend stocks and option-based ETFs. Looking ahead, keep an eye on more Q1 earnings, fresh inflation data, and any hints about Fed policy in upcoming speeches. Don't forget to subscribe, follow, and visit our website for your daily dose of market intelligence. Thanks for tuning in to the Stock Market Daily News Podcast. See you tomorrow.